Hi, I'm Pat-Keon, a research analyst with Lipper, and I'm here to talk to you about fund flow activity for the week ended Wednesday, October 14th. Overall, for the week, we saw net aggregate inflows of $14 billion. This was the second consecutive week of positive flows for the group, as they took in about $12 billion last week. This week's activity, all four groups contributed to the positive flows. Money markets had $7.9 billion in net inflows. Taxable bond funds took in $3.1 billion in net new money. Equity funds had positive flows of $2.5 billion, and muni bond funds contributed $520 million to the total. Let's take a quick look at last week's market activity now. Both the Dow Jones Industrial Average and the S&P 500 index were basically flat on the week. Both indices started off the week fairly strong, but then took a downturn in the last two trading days, which saw each index give back about 1.2%. What triggered the downturn at the end of the week was continued economic concerns about China, as well as some new concerns on the home front here in the U.S. The new item out of China was that the third quarter growth forecast for the country was at its lowest level since 2009, exacerbating fears that the crisis over there might be worse than originally thought. Back here in the U.S., the market was hurt by weak corporate earnings news, specifically out of Walmart. And the Federal Reserve looks like they're going to push back their decision about interest rates until 2016 as economic data continues to be weaker than anticipated. Let's turn our activity back to fund flows now. For the macro groups last week, we saw equity mutual funds had net outflows of $2.2 billion. Taxable bond funds took in about $483 million for the week. Muni bond funds just slightly less than that at $482 million, and money market funds had net inflows of $7.9 billion. Let's take a closer look at our equity fund group now, starting with the mutual funds. As mentioned, the $2.2 billion in net outflows. This marks their third consecutive week for net outflows, during which time they've seen about $11 billion leave their coffers. This week's activity, non-domestic equity funds once again were responsible for most of the outflows at about $1.6 billion. And non-domestic had about $700 million flow out as well. Considering the concerns about China, we took a closer look at our China region funds this week, and we see since the start of the turmoil over there, which is around the start of the third quarter, we see that the group has had about $700 million in net outflows. While this is not a large number, it does represent about 13% of the total assets under management for that category. Let's move on to the ETF side of equity now. The group took in about $4.7 billion in net new money last week. This comes on the heels of $4.1 billion in net outflows on the previous week. Among the leaders this week were PowerShares QQQ, which took in $1.3 billion in net new money. The iShares Russell ETF took about $900 million in net new money, while the Spider S&P 500 ETF saw about $650 million leave their coffers. Let's move on to the next category now, start taking a look at the taxable bond fund group, starting with the mutual funds. As previously mentioned, had about $483 million in net inflows on the week. This broke a string of 11 consecutive weeks of net outflows, during which time they had about $29 billion leave their coffers. This week's largest contributors were high yield funds and U.S. mortgage funds, which took in roughly $375 and $325 million respectively. For the year to date, high yield funds have had net outflows of just over $8 billion, while U.S. mortgage funds have taken in right around $9 billion in net new money. Let's move on to the taxable bond ETFs now. On the week, the group took in $2.6 billion in net new money. This was their second consecutive week of positive flows. The major players last week were the iShares iBoxx High Yield Corporate Debt product, which had about $620 million in positive flows, followed by the iShares iBoxx Investment Grade Corporate Debt product, which had about $610 million in net new money come in. On the sell side, we see the iShares 20-plus year Treasury product had roughly $140 million in net outflows. Moving on now to our next category, muni bond funds. The $482 million in net inflows for the group was the second consecutive week of net inflows. Once again, as we see most weeks, the national muni funds in the national muni categories contributed most to the movement within the group. They took in about $319 million in net new money. led by high-yield muni bonds, which had about $200 million in net inflows this week and are up $470 million for the year to date. Let's move on to our last category now, money market funds. Another big week for the group, taking in $7.9 billion in net new money. Fourth consecutive week of positive flows, during which time they've grown their coffers by about $42 million. The main players this week were institutional money market funds, which contributed $8.2 million in net new money to the total flows. Well, that wraps up this week's report. If you'd like to take a closer look at the data, please join us at our website, www.lipperusfundflows.com. And please join us here again next week, where another analyst will be speaking about that week's fund flows activity.